Hi, I'm Todd Volz, Executive Director of LFPN, that's the Louisiana Film Professionals Network. Thank you all for coming today, and thank you who are checking us out on the stream. Before I get started, I want to thank our sponsors, the NIM Center, Wild Hair Productions, Cineverse, and Stage Light. Thank you very much for your contributions to making this web stream and event possible. A little bit about the LFPN, for those of you who don't know about it yet. We're the Louisiana Film Professionals Network. We're a very loose-knit group of film professionals from Louisiana, and our goal is to build and maintain the film industry here in our fine state. Today's talk is part of that process. What we're doing is having Chris Stelly and Steve Hamner, along with Murray Roth, to moderate, to discuss these new tax incentives that that the state has put through. And I know that there's a lot of questions and a little bit of misunderstanding of how these tax incentives are going to work and what we can do to understand them and to put them into play. So I'm not going to sit here and babble too much longer. I'm going to turn it over to these guys so they can go ahead and get this going. Thank you very much. Oh, wait, but one thing, there's some index cards on the deck on the back. If you have questions, we're going to take a small break in about 30 minutes, 45 minutes. And if you have particular questions that you want, please write them on the index cards and then give them to me. And I'm going to go through and kind of collate them. And if you're watching through the stream, you can email the questions to info@shockmountmedia.com. And I'll take all these questions, and after our short break, we'll go through those questions and present them to our speakers. Thank you and enjoy.
All right, well, thank you everyone for being here, and again, thank you to the LFPN for hosting this event, and I want to thank Chris and Stephen for being here also. My name is Murray Roth. I'm an attorney in the New Orleans area. I'm also a producer. I'm the CEO of Upper Line Entertainment. Basically what we're going to do today is I'm just going to go through many of the topics of the recent changes in the tax incentive law, and I'm going to let them just take it from there and explain. I'll have some different questions, and we're just going to kind of go from one topic to the next, and then we'll take it from there. You guys want to give an intro on yourselves, or?
Perfect. Thank you guys for having me, for sure. Chris Stelly, officially Executive Director of the Office of Entertainment Industry Development. We are a division of Louisiana Economic Development. I've been involved in the film industry in one way, shape, or form since January of 2004, as a matter of fact, when I joined the office. So I've seen the legislation in its very early stages, in its middle stages, and to where we are today. Been very proud of the job that my office has done to encourage this business into our great state and to offer opportunities that otherwise didn't exist before the incentive program. So thanks to you for all your hard work and keeping what I do relevant into the future.
Hi, thanks for having me here. I'm Stephen Hamner. I'm the director of the Motion Picture Investor Tax Credit Program. I've been in the office for 3 years now, and I was brought in. My career background is in accounting, process improvement, internal controls. I was brought in for that financial knowledge and to further refine, retool our processes, make sure we're operating as effectively and efficiently as we can as we run very lean. So I'm very happy to be here, and I'm hopeful to answer some questions that are relevant to you.
Okay. Chris, well, let's start with you. Before I get into any specific topics, is there any, you do these a lot, I'm sure you're speaking a lot, is there any just overview, opinion, or comments that you'd like to make about the changes?
Yeah, absolutely. I think it's key for any audience to understand is that a statutory program tends to undergo multiple changes over the years. This program certainly has undergone its fair share of changes, a lot of them good. It started in 2002 with the original legislation. It changed in 2003. It changed again in 2004. 2005 it changed. 2006 it did not change. 2007, 2009 was really the year that we adopted the most modern version of the program, which is a base rate of 30% with an additional 10% of your Louisiana resident payroll. 2011, it did not change. 2013, they had some changes, and of course, there were several changes made in 2015, this past legislative session. Overall, the bulk of the changes have been really changes based on the way Stephen and my office administers the program and has been administering the program for quite some time. A lot of those changes were really administrative tools that help us better protect the taxpayers of Louisiana and their investment. So what the bulk of the changes are kind of boring in that they help us prevent fraud and abuse, which is of course key to anything that we do. We want to make sure that the people of this state understand that we run a very efficient, lean program, a program that's void of fraudulent behavior or anything like that, so that we can keep you guys employed. I mean, that's central to what we do. And the bulk of the changes, 11 out of the 12 bills, I believe, were designed with that in mind and really instrumental in helping us administer this program.
Well, let me ask, the one that got the most attention is about the cap. So to those who aren't familiar with it, can you explain how this cap works? Because I know it's kind of different than the way it's done in other states.
Right. The cap that the legislature put on the program is a 3 fiscal year cap on the amount of credits that can be claimed at the Department of Revenue. So when you as a taxpayer go to pay your taxes and you're able to offset those taxes with film credits, the most in total that can be claimed is $180 million for the next 3 fiscal years. So that's about as simple as I can make it. There's no limit on the amount of credits that we can issue, so there's no fear of a production never actually receiving their credits. It just may take them a little bit more time to monetize them on the back end, or it may take a taxpayer a little bit longer to claim those credits.
So it is temporary.
It is temporary as it sits on the books right now. It ends June 30th, 2018.
Yes, sir.
So it will phase out June 30th, 2018. And it was designed with the most, with the immediate fiscal, state of the state in mind. So, everyone has read the papers and understands that the state is facing significant budget constraints. So the legislature went in and they didn't really want to do away with the program or do any harm to the program. They just wanted a little predictability for the short term as they can figure out how to fix the budget crisis that we're in. So,
And why don't we back up a little bit, Chris? Because I'm sure there's a lot of people that don't really or fully understand the way the whole tax credit program works.
Right.
Because I get a lot of people, they think it's, they're getting some kind of tax incentives or a tax break on something, when in reality, the program doesn't work that way. Can you just, to the audience out there, give a general explanation of how this program works in the state? Or maybe Stephen.
Yeah, sure.
take that one?
Sure. The incentive works, best description is as a rebate program, and it's based on what productions spend in the state. If they spend X amount over $300,000, which is the minimum for most productions, they get a tax credit of 30% of their spend. So if you spend $1 million, you're looking at a tax credit of $300,000. Now that tax credit can be monetized in a number of ways for that particular production. It can be applied against that production company's tax liability, if any exists within the state. But because production companies are typically spend entities, they generally don't collect revenues and they don't have much of a tax liability. So in order to make the tax credit usable, it's a transferable credit. So they can find someone who does have tax liability, a high income individual, a corporation, something along those lines, and they can sell that tax credit for whatever rate they negotiate. It puts money in the production's coffers, so they can maybe do post-production, so they can pad their bottom line, so they can put more on screen in some instances. And the user of the tax credit, instead of paying a tax liability of $10,000, they bought $10,000 worth of credits for, say, $9,000. They've saved themselves $1,000 to put back into their business or to keep for their personal use. The third way to monetize those credits is currently under suspension through June 30th of 2016, but the state will actually buy those credits back from the production for a discounted rate of 85% of their value. So when you use that option, it becomes a true rebate, and that puts immediate cash into the production's hands.
Okay, and just so it's clear, and we'll get into some of the details, the money that the production spends to get the credit is money that's being spent in Louisiana,
In
correct?
the state. It's employing Louisiana residents, it's being spent at Louisiana businesses, and it's for services that are performed within the state.
And I think a key misconception too is that we're just giving money to productions up front. Any credit that we issue is issued based on actual expenditures that are certified and verified by an independent certified public accountant in the state of Louisiana. So this program is based on what you actually spend in the state and comes at a point after they do all their spending here. So it's not a grant program, it's not a loan program, it's not a program that's just giving free money to productions to come here. It's based on hard investment and spending with our Louisiana businesses and with our Louisiana residents.
As far as the cap, have you guys at the film office seen any effect that it's had on the industry here?
Yeah, we've seen some uncertainty. I mean, anytime you change a plan, it's natural for a business to go in and reevaluate what that plan does and how it impacts their bottom line. We certainly saw some trepidation early on post-session, but right now I would say the last year ended really, really strong. And in fact, while applications may have been down overall in 2015, the overall estimated spending is up. So we're starting to see a lot more applications and a lot more productions coming into the state. So it did have an impact, but once they started to realize, hey, look, this might not really be as significant as we thought, it's starting to really.
Well, that's good to
show
hear,
signs
because I
of
know,
results.
there's a lot of talk and there's a lot of gloom and doom about it, but in your opinion, it's not as bad as it was once mentioned?
No.
No, I don't think so. And there's some industry cyclical factors that are weighing in. Not as many independent films are being produced today as they were a year or 2 years ago. Weinstein, recently is talking about shutting down their entire film division, feature division. Relativity Media has gone through a number of changes. They usually produce 3 or 4 independent features a year. That's gone to 0. So there's some things within the industry, a turn from feature film to more episodic, long-running television series is also reducing the total number of productions that take place at all. And where we're not seeing any fall off at all is in television. We're seeing more episodic, scripted television come to the state than at any point in time in the past.
Yeah.
Would explain to the audience out there all of the different types of productions that qualify for the tax credit?
I mean, it's pretty much everything you put onto a camera, except for pornography, news, and live sports. Or I should say live competitive sports.
Yeah.
So even if someone's doing a short film, that would qualify also?
If they meet the
There's a few
budgetary
criteria.
criteria. Yeah.
So if they're an out-of-state filmmaker, they'd have to spend at least $300,000 in the state. If they're a native filmmaker and they meet certain criteria, they can spend as little as $50,000 and qualify for tax credits.
Because that's the new 50,000 lower threshold. That's new, correct?
That's right. That's new of this last fiscal session. So it's meant to incentivize our local filmmakers and to really build an indigenous and Louisiana resident-driven industry. So you spend $50,000 on commercial, documentary, feature film, and you qualify for this incentive that was only there for larger scale productions prior. Now there are a few caveats that go with that. 90% of your payments for your above-the-line services have to be to Louisiana residents, and then 90% of the total jobs with the production have to be filled by Louisiana residents. So this is something that's really to drive the local indigenous filmmaker.
And to those who don't know what above the line means, just explain that real quick.
Well, your above the line is going to be your actors, your producers, your directors, and those creatives that help, from the creative aspect. So the way the legislature designed this portion is to encourage jobs to be filled by Louisiana residents, which I'm confident we'll see a lot of applications in the future on that.
Yeah, and I'm sure, there's a lot of people with this organization that are filmmakers, young filmmakers, who aren't necessarily making productions that are over $300,000, so that would apply.
Right.
And I had asked you guys before we got started, in addition to the 30% tax credit, there's also the new payroll credit has been increased.
Right.
Can you explain that a little bit?
Right, it's quite simple. The payroll credit went from 5% to 10%, so a production that was earning additional credits for hiring Louisiana residents and their resident labor, it's literally doubled overnight. And so, productions now are incentivized even further to hire more and more Louisianans, which is the original purpose of this statute, is to put Louisiana residents to work.
So when you look at the changes that were made, the tax credit was actually increased in the last session.
That's what we keep saying.
And-
It changed for the benefit, for the better.
And in addition to the increase in the labor credit, there was also additional costs that formerly didn't qualify that now do. So things like marketing qualify to either $1 million or 15% of the budget for certain types of marketing activities, mainly promotional items like posters or popcorn bags, maybe even T-shirts if they're made and printed within the state. And then for trailers, if the trailer is cut and placed together in the state, that now qualifies for the credit where it didn't before.
Okay, and the extra payroll credit, that also applies to the $50,000 to $300,000 productions also.
That's right.
The other big thing that was passed was this, I think a lot of people are calling it the copyright credit, which is this additional 15% for local filmmakers. Can you explain that change and where it stands in the process?
Well, that was another change that was made to encourage more investment in Louisiana-centered projects, in Louisiana written screenplays and different things like that. By law, we can't administer that portion until we have actual rules in place, and we're kind of going through that rule promulgation process and collecting a lot of ideas. Because primarily, that's an added 15% on your entire spend. So you're going from a 30% budget, 30% credit to a 45% credit. So we want to make sure that as the legislature designed that portion, there's no opportunities for abuse or misdirection in where we're issuing the credits. Because there's also a concern about the return on investment of this program. So we want to make sure that if you obtain a non-resident screenplay, it's from a company, a true company in Louisiana with at least 3 employees. If it's written by a Louisiana resident, we want to make sure that that Louisiana resident has had that intellectual property for at least 1 year and different things like that. So we closed out one part of that process. We had a public hearing in December, I believe. We've got a lot of good feedback, a lot of good comments, and so we're now evaluating our next step, which, may be a little bit too complicated to explain the different steps at this point, unless you want to. But that's kind of where we're at with that process. And what we've always asked is folks to look at the rules that we put out there. It's our idea, Stephen and I internally, and give us your thoughts, give us your comments, let us know why this will work, why this won't work. Because we really want to keep that portion as Louisiana-centered as possible and true to the design to encourage more jobs in Louisiana and more Louisiana screenplays getting
and that's what it seemed that the legislature did this session, was they tried to pass things to promote Louisiana filmmakers start to finish.
Absolutely.
And this is part of that program, right?
Absolutely, yes.
Is there any idea, do you have any rough estimate as to when these rules might be finished?
We probably, on that particular section, we probably have a ways to go. I'd say, depending on what path we take, we can either ignore the comments, which is something we're unlikely to do, and go ahead and promulgate so that we can start administering. But I think we've got enough comments that we'll have to republish them and go through kind of that same process all over again. So if we do, there's a lot of other factors. We just underwent a transition with, of course, the new governor taking place. We've got a special session coming up. We've got a regular session coming up. We've got, just different things that are kind of impacting the timeline right now. So once in the next 3-4 weeks, we'll decide which path we take. So realistically, we're probably looking at another 6 months.
At least.
At least another 6 months before.
So, but when you say abuse, I guess what you're getting at is you just want to make sure that maybe some of these big studios can't find a way to be able to qualify for it in some kind of way? Or
Well,
because I would think that wouldn't be good if suddenly it's being applied to big major
well, if the
productions from out of state.
Well, if the studio wanted to come in and set up a company that qualifies, then of course that would be good because they're hiring local residents. But by abuse, I mean it's more of creative ways to say, hey, I'll be a screenplay broker, for lack of a better term. I'll be a screenplay broker, start letting me have this, you can have it for $1 and you can produce it and get 45%. We're really trying to keep it to the intent of the law and to encourage more investment and more spending on Louisiana filmmakers. That's about as simple as I can make it. Wouldn't you agree?
Yeah, I think we caught wind of people trying to set up pass-through companies to acquire scripts and qualify productions that shouldn't qualify with the intent of the legislature for the 45%. So our rule had to be, in effect to limit that type and reduce it and restrict it to true Louisiana screenplays. So that's what we've attempted to do. We've got some good feedback from industry, and hopefully we'll be able to move forward with something that's workable for everybody, that protects the state and works for the industry.
Okay, and just one last thing on that. If the payroll is now 40% and you get an extra 15, does that mean that you would get 55%?
That's
on the
right, because you're
payroll?
getting 45% as a base, and that's 10% is in addition to that. So you get 55% on Louisiana resident labor.
And is that the only part of the new law that is not necessarily being enforced, if you will?
There's one other aspect. You get an additional 15% on your music copyright if you obtain it from a local company. So that's very specific, and we've interpreted that section as to apply only to the purchase of the music. So,
So you can qualify for that now?
Potentially, yes, yes.
Why don't you explain that one a little bit more in detail?
Well, with music, if you go out and buy a Louisiana song written by a Louisiana artist, it a production spend. This portion was also designed to encourage more of that type of activity. So that's about as simple as I can make it, right?
Right, and I think there's some distinction in the law where it may be a bit confusing. Where does that additional credit apply to everything in your budget or just to that purchase? And our interpretation is going to be the very narrow, that if you buy a song, the purchase of that song is what qualifies for the additional 15%. It doesn't then spread to your entire budget.
Yeah.
Let me ask you about aggregating productions to get above the 300,000. So was this the new law, or was this how it used to be?
That's a new provision. We allowed slating of certain types of projects that we saw where it worked. Commercials, post-production, really, that's all.
two.
That's it. With feature films, it didn't really work, so we never really had we never really allowed motion picture productions, full-length productions, to qualify for a slate. Again, the legislature puts minimums in place for a reason. However, they went in and redefined it very, very tightly as far as what a slate of motion picture productions would look like.
So if you have up to 3 different productions, you can combine them together.
Correct.
That's right, but you have to apply before you start rolling on your first production. So if you know you're going to produce 3 movies, they're each going to be $100,000. You can apply with that slate, and once you've done all 3, you're eligible. You can receive your credits. But the legislature, I think, very intelligently defined it tightly, in that it's limited in the number of productions. It has to be established and approved before you begin, and that you can't piggyback 2 small productions on top of a production that exceeds $300,000. So each one has to be under the minimum spend on its own right.
Okay.
Yeah.
And is there a time period that they have to do all 3 of the
I think they
productions?
do, huh? Yeah, statutorily, I think you have 2 years from date of initial certification to complete the spending process.
That's right.
To me, it would seem that would really only benefit an out-of-state production, because if you qualify as the Louisiana production, you really don't need to
That's
aggregate,
right.
because you go down to 50, correct?
Right.
That's right.
That's correct.
Let me see, some of the other things that I had questions about. There's another cap on the amount of payroll that can be paid to any one person.
Right.
How does that work?
Well, that's an individual cap. No one person on the production can. Let me back up. You can get paid whatever you want to get paid or whatever the production is willing to pay you. We are limited in the amount of credits that we can issue to an individual, to the production based upon $1 million in payroll directly to the individual. So if you're a person and getting paid as an individual, not through a loan out, the most credits we can give is $1 million of your salary. So that's for residents and non-residents. That caveat does not apply to any person getting paid through a loan out or a loan out getting paid.
Well, explain to those who don't know what that is about a loan out and how that makes a difference. Because wouldn't you just start a loan out to just bypass that whole cap?
It's one way to do it. So the statute first makes a distinction between an individual and a company. So an individual is a natural person, somebody who has flesh and blood and blood use, whereas a loan out company is an entity. So the way the wording in the statute works out, it places this salary limit on individuals, on people, but not on the loan out corporations. Now, a loan out is typically used by your above the line participants in the production, actors, producers, writers, directors. And it's a tax shelter, it's a liability limiter, and it allows the actor to operate as a corporation, where he pays his assistants through his loan out company. His expenses are paid by the loan out company, and he draws a salary or a distribution from that company. So the statute speaks to limiting the individual salaries, but it doesn't speak anywhere to limiting what loan outs are paid. So if you want to bring in a top flight actor and pay him $5 million, and you're paying that to his loan out company, there's no limit on that in terms of what you can get tax credits on. Well, I shouldn't say there's no limit.
Do you think that was an oversight, or is it intended to be that way, or?
Yeah, it's hard to speak directly to intent unless it's explicitly spelled out to us. There really wasn't much debate about that at the time and the way that went down. I think it was to limit salaries and what we give credits on, however, by placement in the law. Again, the additional 10% does not apply to loan outs. It only applies to natural people. So a lot of these statutory construct, it's all depending on the words. I mean, changing a word from may to shall means all the difference, as you know.
I know.
So it's one of those things that happens sometimes, and hopefully we'll have some opportunity in the future to fix it.
Yeah, there were a lot of moving parts in the session, and a lot of different bills progressing in different ways. I think probably the intent was to limit limit credits on salaries to the above the line participants, and with a hard dollar amount. But that's not what ended up happening. But what the legislature did do, and I think it's a better way to limit it, is they limited what your above the line players, so that's either natural people or loan out corporations, can be paid and receive credits on as a percentage of the total budget. So that's limited to 40% of your budget. So we had seen some productions, and it's rare, where the cast and producers were taking up 50, 60% of the budget. Mm-hmm. Now, generally, those type of productions are very low quality because there's nothing left to pay for locations, to pay crew to make the movie. So they end up being very poor quality productions, but the production companies are getting a lot of tax credits on that.
Yeah, and I was going to add that those types of productions really don't have much substantive economic benefit for the state. So, you really want to have a program that focuses and targets the spending on below the line. Your catering, your local businesses and different things like that. So that's really, one other great aspect of the program is that it's really focusing the spend on Louisiana spend.
Right, and I know that's a touchy subject, dealing with the actors, because you don't want to take that away, because
right.
it from a competitive standpoint, dealing with other states, but that's not really the best place where the money's to be spent. You want it spent on Louisiana people.
Yeah, it's proportionate. If you've got a $100 million film, but only 15% of it's above the line, you're getting 85% of good, hard, local spending. If you've got a film that might be $1 million, but they spend only $300,000 below the line and the rest is above the line and going to one person, there's no real substantive economic benefit to that, or no trickle down that you can point to. So it's really about, again, targeting the spend towards those expenditures that make the most substantive economic sense for the state.
I'm looking through real quick. There was another 12% of something that
Yeah,
applies
there's-
to above the line?
right.
What was that?
That's
Related party.
related party transactions. So related party transaction, it's an accounting term, but it's simply, and most basically, someone paying themselves to provide a service for something they own. So I own the rights and the production of a particular movie, and I'm going to pay myself to be the producer. So I have all the financial and creative control. I can decide what I'm going to pay myself. And earlier in the program, there was a lot of abuse and a lot of the criminal convictions, a lot of the fraud was centered around these above-the-line related party transactions. So it was really critical for the betterment of the program overall that we limit those to something that's reasonable as a percentage of the budget, and also that can be verified through economic substance and fair market value.
So it looks like the legislature really kind of tightened up a lot of things.
It did.
Completely, yeah.
So-
And again, a lot of these things that are now in state law were things that we were already doing and had been doing for a number of years. So it shouldn't have surprised many people.
Well, for those out there who, just let's say they're going to do a $100,000 film, but they've heard of tax credits before, but they don't know the first thing about how to apply, the process. How does one start the process of applying for tax credits? And let's use as an example a $100,000.
Right.
Sure. Typically, it'll start with a call to me, and they'll say, "What do I do?" And I'll point them exactly to where they need to go. It's all the application is all online, and it's a very low bar to apply. There's a $500 application fee, and we collect certain documents: a sample of the script, a copy of the budget, a statement from the filmmaker that says this production is a motion picture production. We get them to sign an affidavit that says that we're going to pay our creditors before we come back and try and get tax credits. And if you meet all the other criteria, the spend threshold, for this $100,000 example, they'd have to be able to tell us that, 90% of my above-the-line payments are to Louisiana residents, and 90% of the jobs in my production would be to Louisiana residents. You do all those things, and we'll give you what's called an initial certification letter. That means you're a state-certified production, and when you start spending money, you start earning tax credits.
I know there's been a lot of talk about the deposit that has to be put down for the CPA audit.
Sure.
So at some point, all of these expenses have to be audited
Correct.
by a CPA, correct?
Yes.
And what was the changes with that?
Well,
The biggest difference is historically, the statute allowed the production to engage with the CPA and hire the CPA themselves. We as a department determined not only for the film program, but for all of our programs that LED was the best entity to assign a CPA. So it's not necessarily changing the overall cost to the production, it's just changing how that cost is attributed. And we do collect an initial deposit. I think it's $5,000
For the local production,
for the
yeah.
local productions. We did everything that we could within the limits of state law to lower it and make it as easy as possible for our local filmmakers to enter into the program. But this is a cost that you would have to have had anyway for the program, but now we just collect it on the front end.
Right.
And it's a deposit. It's fully refundable. It's all going to depend on the hours that the CPA takes to audit the books.
And I think where it'll really benefit production, because now we have a relationship with the firm. We're familiar with the procedures they're doing. We know the quality of the firm in question that is being assigned. The review time on our end is going to be reduced, so credits will go out faster.
Yeah.
So where you may be waiting up to 120 days, now we'll be able to reduce that significantly.
What is the average cost, so you could explain to the audience, for that CPA audit report?
We don't know yet.
Yeah.
It just went into effect.
And the reason I say that,
January
because
1st.
if you're doing a $55,000 picture and you got to put up a $5,000 deposit, that's
Right.
a pretty hefty sum. Would it usually amount to that much money to audit that small of a production?
It depends on the number of hours the CPA takes. For the $300,000 and above, we hear anywhere. These things could cost anywhere from $10,000 up to $25,000. Now, a lot of it's going to depend on how well prepared the production accountant keeps the books. So they have to make sure that, one of the things that we're doing is we're assigning the CPA on the front end so that they can engage with the production as early as possible, so that they can present the books. A lot of it, the cost just depends on how many hours it takes the CPA to review the documents that they're given. At $55,000, you should not really have that many expenditures. So I think overall relative to the spend, there should be very few samples that they would take and very few hours that they would spend on it. So, the $5,000 is just a deposit. If you do not reach the $5,000, we're going to refund that back. If you go over, we're going to request additional funding.
And on larger productions, let's say those out there who are making, say, a $750,000 film, what's the deposit
The
for
deposit
that?
is
How is it
$7,500.
determined?
It's by budget, so anything from under 300,000 is 5,000. If you're 300,000 to 25 million, it's a $7,500 deposit with a $15,000 max. If you're over 25 million, it's a $15,000 deposit with a $25,000 max.
I know there's something else in the law dealing with withholding of Louisiana payroll taxes. How does that work? That's something new?
That's something new. For a production to receive credit on anybody's salary, they must withhold 6% in taxes and remit them to the Department of Revenue. That's something they should have already been doing. This is just an added effect of making sure that the state receives the proper amount of taxes, and then it forces the individual that earns money while working here to file their taxes in accordance with state law. It's always, the requirement to pay Louisiana taxes has always been there. Now if the production wants credits on these salaries, they have to withhold 6% of the salary. So if you make $10 million, what is it? You got remit 6% of $10 million.
So
That's not and that's not something that's unusual in the industry.
So going back to the $100,000 filmmaker, to get the process started, they pay a $500 fee. They have to come up with this $5,000 deposit.
That's right.
Any other upfront fees that they have to pay?
No, that's it.
And then what happens after when they want to collect on their tax credits? How does the process work then?
They'll notify us that they are ready to begin their request for final certification. They'll have already been in contact with their audit firm. We'll let the audit firm know they're ready, and the auditor will go in and conduct a normal review. They'll look at the expenses, make sure everything lines up, and issue a report. And once that report's in our hand, we'll begin a review and then issue the credits.
And just to explain to everyone how it works, what form are these credits? Is this a
We issue what's called a final
a
certification.
letter?
Yeah,
It's
we issue
just
what's called a
something-
final certification letter. It says when you earned the credits, so which tax year you can apply those credits to, and how much you've earned.
And then going back to what we talked about when we first got started, so just to explain to those who aren't familiar with it, how do you use these credits? So if you owe income taxes to Louisiana, you can take that letter
Correct.
and file it with your
That's
tax
right.
return?
Yeah. In addition to the letter that we issue, the recipient will have that letter signed by Stephen and signed by our undersecretary at the department. They will also be issued another form from the Department of Revenue. So the Department of Revenue will turn that form around in 10 to 15
1 or
business
2 days. They
Yeah,
said 1.
so 1 or 2 days. They'll turn that form around, and then if you do have Louisiana tax liability, you attach the cert letter and the form that LDR provides you to your income tax returns, and you remit them, and then you're done. The second option is to take that certification letter and the form that LDR issues you and transfer those credits and act a legal document between you and the recipient party to transfer the credits to that other party. Then that other party will take the documents. Those credits will now be re-registered in the registry so that the new owner will have a new form saying that they are the rightful owner.
Okay, and let me just stop you there, Chris,
Right.
we don't,
And
because I want people to understand,
again,
a lot of
right,
people
right,
don't know how this whole
right,
system
right,
works.
right.
So if you're going to sell your credits, you're going to enter a legal document where you're going to sell it to someone else who wants to
Correct.
buy them from you, and they're going to use them to pay their Louisiana income
Right,
taxes, correct?
that's right.
They're usually going to buy it from you for something less than the face
$1.
value, correct? Now, isn't there like a fee or something that's charged
Yeah,
It goes into a fund to the state?
LDR, for every time you transfer a credit, LDR collects a $200 transfer fee. And that's been something that's existed since 2010. So LDR will collect an additional fee for each transfer. So if I transfer these credits to you, it'll cost me $200, or whoever, it doesn't matter who pays it, it just has to be paid before LDR will re-register and recognize the transfer. So
Another change to the statute, though, is that historically we've issued the credits to the entity that spent the money. So the production company got the credits. But now the statute allows for the production company to name an irrevocable designee. So if they have an investor or a lender that is going to take possession of the credits, they don't have to transfer them anymore. We can just issue the credits directly to that individual or entity.
And that gives them the rights that the original recipient had. Mainly, now the irrevocable designee can come to the state for 85 cents. So if, for example, you're a bank and I lend you money, but I want the credits to come directly to me, the bank, once I get the credits as the bank, I can transfer them to the state for 85% of the face
Right,
value.
I'm gonna get to
Yeah,
that one in a minute. Let's just stick with
I'm
you're
sorry.
selling them to somebody
There's
else.
so many different
So
ways that these
this
things-
is the really what the program is all about, is that this filmmaker now can sell these tax credits
Right.
for a cash amount
Correct.
that goes back into their pocket.
Correct,
Okay.
correct.
But if you have what you're talking about with the irrevocable,
Correct.
that's a situation where maybe, let's say someone's making a $750,000 movie, they're halfway through the production, they already have their initial certification letter from you guys, but they need more money. And they actually get a loan from a bank and put those credits up as collateral.
That's right.
Right.
For that loan. The bank lends them something less than that. And then when everything is finished, you guys issue the tax credits straight to the bank.
Correct.
That's right.
Or the investor. I mean, that's one of the things that you guys as independent filmmakers need to consider as well when you're making your pitch, is say, hey, Uncle such and such, Uncle Warbucks for whatever, we can have the state issue you the credits directly so that you eliminate some of the legal fees that may go within the transfer process, and that also gives your investor a little bit more confidence to know that, hey, I'm going to get these credits and I can choose to use them how I see fit. You know that they're valued at 85 cents from the state. That's the state will guarantee. So whatever deal you make, you may be able to add a couple of more points to get that upfront cash. So, an 87% tax credit for a wealthy individual may be a good deal, and you get 2 extra pennies outside of the 85%.
Right, and it benefits to me, the filmmaker gets cash back in their pocket through the program, and then the Louisiana taxpayer that purchased the credits is getting a reduction on their Louisiana taxes because they bought them for something less than the face value.
Right.
Correct?
Yeah.
So the third way to get money that you got to a minute ago is that instead of selling them to a third party out there, you can actually sell them back to the state,
Right.
correct? But
Correct.
that's on hold for the moment. Explain
Correct.
all of that.
It's the same way you would transfer a credit to an individual. You just transfer them back to the Department of Revenue, and the Department of Revenue will cut you a check. That's about as simple as we have made it, and that it can be made. That was put on a 1-year suspension ending June 30th, 2016. But any production receiving a credit now are applying now to the program will probably not see a credit till well into the next fiscal year. So that's really one of the things that no one has to really worry about anymore.
Before I move on to some of the other more specific ones, now there's a special session maybe coming up.
Right.
What's the word in the grapevine? Is there any changes that are going to be made?
There's nothing, no specific ideas have been formulated. Again, I think from a bigger picture standpoint, the governor and the legislature are really looking at some serious issues facing the state and some dire circumstances if they don't do anything. As far as I can tell right now, film is not part of that plan. So it's kind of like everybody else, we're just waiting and seeing what the plan will be. But as it stands right now, I don't see the program coming up again in a special session. But that's forcing me to predict, and I'm not good at predicting.
Well, we have you here, so we got to ask those questions. there was some changes made regarding insurance fees, finance fees, things like that, that you used to be able to
Right.
to get a tax credit for, but no longer.
Yeah.
Explain that.
Well, part of the exercise that we were tasked with early on in 2015, I think it was, we were looking at ways to focusing these incentives. Part of our job, Stephen and I, we always are trying to make the program better and more beneficial so that the economic return to the state is good, and propose changes that have some impact but very minimal on how the industry works. And part of that was really focusing on some of the expenditures that don't make, again, much substantive economic sense for the state. They weren't big job creators. They weren't, really putting much back into our economy from that standpoint. And oftentimes, as policymakers, we have to look at it and say, okay, in order to keep the program around, we have to make targeted cuts to, focus the spend to get the maximum economic benefit. Insurance is one of those things. Finance fees, which are really soft costs. Airfare, for example, it doesn't make much sense to give 30% of taxpayer dollars for an airplane ticket where all that money is going to the company that's outside of the state. Those overall, and what we had seen historically, represent about 4% of a production spend. So it was a really minimal impact, but from an administrative standpoint, these items were getting more and more difficult to administer, because folks were trying to come in and say, well, we're going to take out a $100 million insurance policy, pay it all to a Louisiana broker, but shoot the film somewhere outside of the state. So it was one of those things where we as administrators and policymakers have to determine, where can we show some savings within the program, but at the same time focus, again, the overall picture, focus more of the spend into substantive economic benefits for the state. And so that's really where all that came from. We were charged, I think what was it called, the GEMS report, the Government Efficiencies Management Services. So we had to go in and look at things that we spend an inordinate amount of time reviewing and getting down, was this purchased through a local Louisiana agent? Okay, what does it cover? How does it? And so Stephen and Amanda were both spending exceptionally large amounts of time, reviewing just very small percentage of the overall spending. So that's just another one of those changes that will increase the return on investment of the program.
Okay, and Stephen, you mentioned marketing before.
Yes.
So they did add some more things
That's
for
right.
marketing, trailers,
That's right.
posters, which are important to independent filmmakers.
Right.
Anything else you want to add on that one?
No, well, just going back to the bond insurance, the finance fees, airfare, those things are going to be statutorily ineligible, but not until July 1st, 2016. Right. So productions that are coming in today, they'll be able to qualify those expenditures. Right. But yeah, so we did reduce those. So we found those costs make up about 4% of the total program. But we've increased that labor credit, and labor is about 20%. So you're getting an extra 5% there to offset that. And then we've added things to qualify that previously didn't, such as the marketing expenses. And those can be up to $1 million, or 15% of the budget can qualify, where before you'd have gotten nothing on that. So if you come in and do that in the state, we're giving you a little more carrot to use Louisiana vendors to employ Louisiana people.
Let me ask you, there's one thing specifically it says in the law about, quote, media buys. Explain to the audience what that means.
Sure, that's just buying time on a network, on a cable television, like a Super Bowl ad. Right. If you want to run your trailer during the Super Bowl, you pay $2.5 million for that 30 seconds or a minute. That type of activity won't qualify.
But isn't there an exception there are some exceptions if it's through a Louisiana company? Is that not
Tiny
right?
except the commission you would pay to a broker can qualify. So if you have a Louisiana company go out to buy your time and you pay them, say, a 2% commission to do that, that 2% piece can qualify for the program.
Okay.
Yeah, it's very limited in what it allows. And again, it's another aspect of the program that we feel will allow companies like printing shops to expand their operations and hopefully hire more people. And if you can come in and get your one sheets and your posters and your cards and all that stuff done here, then those are good things that ultimately will, hopefully, will result in more hiring.
What is the window? So like when you get your certification letter, you apply, what's the window of how long you have to finish your production? Or do any expenses you incurred leading up to that apply? I know there's a window. What is
sure.
that?
You have basically a year, from the day you apply, we can go back a year. So if you came in and did a scout in January and you're applying the following January, you can capture that scout from the year before. So from that application day, it goes back a year and then it goes forward 2 years. So you have 2 years to get your production wrapped and posted and everything done in a nice little bow. And then you have an additional 6 months to alert us that you're ready and for us to send in the auditor and be audited.
Yeah, so production roughly has 3 years to that the initial cert will be valid.
And what we've seen the cycle in the longest cases is about 2 years anyway. So we've given the productions enough time to do what they would do.
Well, there's one thing in the law that mentioned about a 5-year carry forward. How is that different than what you just explained?
Well, the credit when it was earned and certified had a 10-year carry forward, meaning that a taxpayer had 10 years to claim it. So now, given that typically these credits don't last or are not on the books for 10 years, from an administrative standpoint, squeezing that amount of time to 5 years. So now once you earn the credit, you have 5 years essentially to claim it with the Department of Revenue.
Okay, so that's not about finishing your production.
Nothing to do with
when you
finishing.
claim
No,
it.
that's more geared towards the makeup of the credit.
And one other thing that it mentions in the law, that there was a change about when you actually earn the credit.
Right.
Explain to the audience exactly what that means and what the change
Yeah.
was.
Historically, credits have been earned when you spend the money. So if you made an expenditure in 2013, you have a 2013 credit. What's changed now is for expenditures that occur after July 1st, 2015, you earn that credit when we issue the credit to you. So if you spent money in July 2015 and you get your final certification from us in January 2016, you don't have a 2015 credit, you have a 2016 credit. So it couldn't be used in May when taxes are due. It would have to go to the following May.
Yeah, you can't use a 2016 credit to offset 2015 liability. So that's why that was a change that again happened at the last minute. One of those things that happened. So out of our control. But that's essentially changes for the taxpayer when they can use the credit. And for some, earned when spent meant that you were starting to get a vested interest in this product because you weren't earning credits when you're spending money. Now you're not earning credits until we certify. So if you spend in 2012 but don't submit an audit till 2017, you're going to have 2017 credits. And so that impacts the usability of those credits.
Well, Todd, you want to open up to questions? You want to take a break? How would you like to handle it from here?
I think we're going to take a 10, 15-minute break. We'll come back at 3:40. And in the meantime, if you guys, there's on the podium in the back, there's some index cards. If you want to write any questions that you have on the index cards and give them to me, or you can drop them off at the table over there by sound, and I'll collate the questions. So we're not having the same people ask the same questions over and over again. Essentially, the reason for that. But hi, this is for the people on the stream. We're going to take a 15-minute break, and then we'll come back and have some questions. If you want to submit questions, submit them to info@shockmountmedia.com. Also, at info@shockmountmedia.com, let us know if you want to join the LFPN, and we will put your name and email address on our mailing list. Thank you. Hello. We're going to start in just a minute here. If you guys want to start making your ways back to your seat, but before you get to your seat, there's water in the back. If anybody would like to get some bottled water, there's water in the back of the room. We're back in. Hi, welcome back. Those of you on the stream, welcome back. Everybody here in the room. For this section, those on the stream, you will just hear my voice asking the questions, and then our distinguished panel, will answer them. Starting off with, can you split the credits between several designees? And the second part of that question is, what happens if the film is not finished?
I think the first question, can you split the credit amongst several designees? From our standpoint, and the irrevocable designee discussion, it only speaks to one designee. I think you'll get into an issue if we have to split the credit amongst multiple investors. Something we really haven't explored in any detail at this point. But once the credit is earned, that credit can be split amongst multiple taxpayers. There's no limit there's no minimum amount that can be transferred, or there's no minimum, amount of transferees that can receive the credit. The second part of the question again?
What happens if the film is not finished?
What happens if the film is not finished?
It largely depends on initial certification date.
Yeah.
If the film was initially certified prior to July 1st, 2015, it can have multiple audits. So once they've exceeded $300,000, they can submit for a first audit, and if they have debt more spend down the line in any amount, they can submit for a second. If they're initially certified after July 1st, 2015, they're limited to one audit, so they can request certification as soon as they've exceeded $300,000, but they can't get anything else down the line.
Let me actually, Stephen, just on that particular question, I think what they're asking is, do you have to actually finish the movie to get your tax credits? What if you spend $400,000, but for whatever reason the movie does not get finished? Do you still get tax credits on those funds?
The easiest thing is just to finish a movie.
Yeah.
Yeah.
I think you get into some tricky scenarios there because there are certain things within the statute, for example, that we didn't discuss earlier. Now there's a logo requirement, so you have to meet a certain requirement to get the full 30%. If you don't finish the film, how can you meet that requirement?
What does that mean exactly?
So one of the new areas of the statute is you have to use an approved Louisiana logo and have it run for 5 seconds before your below the line crawl, and that's to get the full 30%. If you don't do that, you operate at a reduced credit of 25%. So for a film that doesn't finish, it's very hard to meet that requirement. So now you're talking about a 25% credit. Now, another aspect of the law is the production has to have multi-market distribution. And for something that doesn't finish, do you meet that requirement? Is the requirement actually that the film be distributed, or is it that they intend to have done that? So I think there's some questions to talk out at a much deeper level than we can really get to today.
Okay, another question. Are loan outs exempt from the 6% withholding requirement?
No, anyone earning a salary or any entity earning a salary is required to be withheld on. So, no. Quick, easy peasy.
Are any of the new credits from 2016 retroactive for productions ongoing but shot and started in 2015?
It'd depend on the expenditure date. So for the expenditures that occurred before July 1st, 2015, they would have been earned when the money's spent. So if you spent $100,000 in June of 2015, that $100,000 would translate into 2015 credits. Anything after that date would transfer into 2016 credits.
I think I might skip this question. I think we tackled this. I might change this a little bit. How do we avoid a situation like some of our other local producers who ended up in jail?
Don't commit a crime. Yeah, obey the law. Don't commit a crime. Yeah. That's the easiest.
If you say you spent money, actually have spent that money is
be happy with 30%. It's very generous. Yeah. Figure out a way to finish the film rather than trying to get tax credits fraudulently.
Okay. Previously, productions could contract labor as independent contractors, as they would be liable for LA taxes. With the 6% payroll requirement, are productions no longer able to 1099 crew?
Now, you can still 1099, you just have to withhold. Right?
Yeah.
Yeah. So just think of it very basically. Anybody earning a wage, no matter the mechanism, whether it's W-2, loan out, 1099, if you're earning a wage for working in Louisiana, then the production is required to withhold 6%.
If a production spent money in June 2015, this is similar to the question you guys answered, but I think there's a slight variation. If a production spent money in June 2015 for prep and then the remainder after July 1st, 2015, will the credits for 2 different years be issued?
Yes.
Yep. Good question.
Does the current $180 million cap include projects that are already grandfathered in?
There was no grandfathering within the cap. It's just any credit claimed at the Department of Revenue is subject to the $180 million cap. So it doesn't really matter when the credit was issued, when the person obtained the credit. The maximum for the next 3 fiscal years that can be claimed by taxpayers in total is $180 million per fiscal year. Now, one of the things that I think we forgot to mention, but another important caveat, if the entire $180 million is not utilized in one fiscal year, the remaining amount rolls into next year. So there's a situation where next year could be potentially higher, meaning more credits can be claimed.
And let me follow up on that. So that would mean that the cap would actually be higher for the following year?
The cap would still be 180 plus whatever remains.
Exactly.
So yeah, essentially it would be a higher cap.
And what if you have a person who owns tax credits, but let's say the state meets that cap and they can't do it for that year, aren't they given special priority for the next year?
No, that's more a question for the Department of Revenue. These credits are being claimed on a first come, first served basis. So if a taxpayer happens to be rejected at some point, or if we reach that cap, then that's really more of a function for LDR and how they would handle it. I think they would say the credits are invalid, therefore I think they're going to waive penalties. They can't waive interest, so the taxpayer would be due to pay those taxes, and then they could get in line for the next fiscal.
And one other thing, Chris, has this cap ever been reached in Louisiana?
The historic
Yeah.
5-year average is like $183 million.
Right.
So the capacity the legislature gave them is very close to the historical claims rate.
Yeah. So,
Okay. This is a question about the screenwriters' 15% indigenous screenplay credit. As a resident Louisiana writer owning the copyright of a screenplay that will go into production, there are some legal steps that need to happen for the production company to produce it. How can a newly formed production company that produces a Louisiana resident's writer's work with a copyright material, copyright for several years, benefit from the additional 15% for indigenous screenplays?
oh man.
It's a very good
Yeah.
question. Well, it's one we're still trying to figure out ourselves. So whoever asked that question, as we move forward with the rulemaking process, please give us feedback and let us know what's going to work for the filmmakers, or for screenwriters, I should say.
And one other thing too to stress is that if you're looking at taking advantage of that particular section, let us know when you apply, because the credit does exist as of July 1, 2015. So if you are interested and you think you may qualify, we may not be able to give you, we will not be able to give you a definitive answer, but at least indicate in your application that you intend to take advantage of it if you qualify. So we don't want to deter people into waiting for us to promulgate rules on these, because there's some other nuances in the law with the application as to when we can capture expenditures. So if you're ready to apply, and then at worst case scenario, you don't get the credit, but at least if you do get the credit, we'll be able to issue it down the line.
And I have one thing on that one, because I have a question. When you read the law, the way it's written, it says that the production company has to have owned or optioned the copyright to the script for
Correct.
1 year prior to
For 1 year.
production.
Yep.
In copyright law, you don't necessarily have to have your copyright registered with the Copyright Office to,
Right.
quote, own the copyright. Does that, or can you answer that? Does that mean that you actually have to have the script copyrighted, registered with the Copyright Office, or you just
We have-
legally own it, you've written the script?
We
if you will?
have to have some third-party verification that you have actually owned that copyright for 1 year. Whether it's through the Copyright Office or through the Writers Guild of America, some third-party indication that rather than just your word saying, oh yeah, I've held it for a year, we need some sort of third-party verification, and that could be simply registering the screenplay with the Writers Guild of America. But it has to be, again, that's another thing that we're dealing with a statutory requirement where we're now put in a position to have to define these things. So, good point. We're not going to make it as onerous from a legal perspective on that aspect.
And I think this next question speaks a little bit to that, what we were just discussing. This is for Chris and Stephen, do your websites have the information we're discussing today? And if so, what is your website?
Absolutely. Our website is louisianaentertainment.gov. Quite simple, all one word. Stephen's email address is on there. My email address is on there. Shoot us an email if you have further questions. But our website is really designed to be the end-all, be-all information hub for anything that anybody could possibly want.
Moving on to the next question. The back-end cap seems fine for studio shows that can wait for the money, but it appears to have killed indie films from coming here. Your thoughts?
Killed indie films. Man, we don't want to do that. No, I think I would be remiss to say that it hasn't had an impact. I think more significantly for independent films, what's had the most impact has been the suspension of the 85-cent buyback. I don't think it's been necessarily a matter of when they get the credit, but it's all about monetizing that credit. And so suddenly when you have something that has value that a lender, that an investor can go to and say, oh, the state One of the misconceptions about the buyback, I'll reverse a little bit and shift gears. One of the biggest misconceptions about the buyback towards the end of session was that tons of credits were being transferred back to the state. Well, that wasn't a reality. It was less than 10% of the credits that we issued were being transferred back to the state. But what that 85-cent did from a financial perspective, and you can ask independent filmmakers that are trying to get financing, what that did was provided a backstop for the banks, for the lenders to know what the value is. So the closer we get to that buyback coming into place, we're starting to see more and more independents getting financing and applying. Wouldn't you agree?
Yeah,
Because I
it's
think
one
that's
thing-
been the more significant thing, not necessarily the amount of the cap.
It's one thing we've heard over and over again from independent producers is that it's harder for them to get lending because the banks don't know what the basement is anymore.
Yeah, I mean, that's stability. The financial markets want stability. So, that's probably the pinpoint in 2009 when we changed that legislation, is upping that buyback to a more reasonable amount to say, I know that come hell or high water that the state will guarantee 85%. And you started to see more confidence with banks lending and other financial institutions lending money.
So what if a studio or client has used the same CPA here for the audit for the last 5 shows? Now you assign them a CPA that they have never worked with and they don't trust them.
It's not necessarily a matter of trust for the production from our standpoint. It's more of a matter of us getting quality work. I don't think, these CPAs that we have in our pool now are from very reputable firms. So again, I think the system is going to work just fine. I don't necessarily think we have to have more trust in what the CPA is doing than the applicant, if you're asking me my honest opinion. I think that level of trust will come back for them in what Stephen mentioned earlier, in our ability to essentially issue the credits even quicker. Not much is going to change in the review process, or not much should change, because the CPA should have already been doing this level of diligence to begin with. So if it's a shock to the system, then maybe they had a CPA that just simply wasn't performing as they should have been performing all along. So, it's going to be a transition time. It's going to be us feeling it out on our end, seeing how this is going to work for us, and it's going to be different for the applicant. But in the end, I firmly believe that it's going to be good. You're going to get your credits much quicker. There's going to be a lot less back and forth with my office, asking questions that the CPA may have already asked you. Why is Stephen asking these crazy questions that you already asked me? Why is he dragging me through the ringer? So ultimately, I think the system will prove much more beneficial, and these questions will go away. Does that make sense? Yeah. Cool.
What happens after the cap is lifted in 2018?
Woohoo! No. That's just it. The legislature just needed a temporary. It's business as usual. I mean, it's still business as usual to a large degree. I think. From the standpoint of the legislature, they just needed predictability. So what happens is, I think, I don't think much changes in the way that just that number's not looming over everyone. So, we'll have to see. That's a ways down, but we're already 6 months through the first fiscal year, and so far it hasn't proven that we've reached the cap. So we'll see.
How will the cap affect actors in comparison to before the cap?
It shouldn't have any effect. We've seen a slight constriction in activity for the very short term, but I don't see how it would affect an actor directly over the long term at all.
All right, sit down for this one. They filled the entire card. If I have a $50,000 production and I have 90% or more LA employees for payroll, I'll get the payroll bump, but would the most I could pay a name actor be $5,000, 10%? If the writer, director, producer is local, who does not draw any above the line salary, this is hypothetical. To start, I would pay the $500 fee, the low-end audit fee. Was it a $1,500 or $5,000?
It's 5,000.
5,000.
And be prepared to cover 6% payroll tax. Is that the simplified overview of a $50,000 low-budget film?
Actually, that scenario wouldn't work because the Louisiana residents above the line aren't drawing any salary.
So if that would mean your 100% of your salaries were going to a non-resident, so that wouldn't fit unless we're getting the question, but that's the question I heard.
Yeah, so if you're paying that named actor $5,000, you'd have to be paying some Louisiana residents another $45,000 to fill those above the line positions. Now the 6%, that's a withholding on, that's not an extra cost to the production.
Yeah.
That's for the individual. So if I pay an individual $1,000, they'd get a check for $940 and $60 would be remitted to the LDR. So the production company is still writing the same gross amount out.
Yeah. It just impacts take-home pay, not what the production is on the hook for.
Okay, I think we got through all of these. And one question that I wanted to pose is a kind of an amalgam of things that people had posted on the website. What do we say to these productions that are not coming to the state because they're worried about the state of the tax incentive, that the instability of the tax incentive?
Sure. I think the big thing is we have a temporary constriction on the claims of the cap of $180 million. Now, that's very near the 5-year historical average of claims rate. It's about $182 million. So there's really not that much of a constriction in place. And then the other thing is that it's temporary. It's for 3 years. And these credits, when they're issued, they're going to have a 5-year carry forward. So your worst case scenario is that you can't use your credits today, but the life of the credit is longer than the life of the restriction.
Yeah. And on top of that, you're getting more for your Louisiana labor. You're getting the benefits of a great crew base. You're getting the benefits of absolutely fantastic infrastructure. You're getting, the benefit of just the experience that Louisiana has in these programs and the ability to get things done, film-friendly communities, a pool of talented actors like many of you guys in this audience. So you're getting the benefits certainly far outweigh the risk that you're taking by coming to Louisiana.
Just realized there was one more question that somebody had handed me at the 0 hour. Let me see if I can pull it.
Oh, it's too late. We like deadlines in state government, man. If you didn't get that application in, you're done. Yeah. So it's too late. Oh no.
Do you all have an estimate of the amount of tax breaks that are issued out in the world, hanging out there?
Issued?
We know what we've issued. We've issued close to $2 billion since the life of the program. No, we don't. We're working with revenue to get a strong handle on that number. They have a number out there. It's something that we working with those guys to really trim it down to make sure that it's an accurate reflection of what is out there.
So rumors aren't.
I can't substantiate any rumors. Substantiate, or I can't. What's the word we like to use? We can't substantiate, confirm nor deny any of it.
Unclaimed stuff to clog up the thing and keep it all not working.
I looked at, if you look at the short-term history, the issuance rate versus the claims rate is almost lock in step. So, again, that's something that we're working on.
I'll just have you go ahead.
Oh, I just had one question.
I thought they had to be written. I'm sorry.
I'm sorry. This is the real last minute. I'm
Yeah.
Victoria Green. Thank you for being here. There's a 2-year limit from the moment the application is required, and it includes documentaries. For future documentaries, that's very difficult to finish a documentary, pre-production, production, and post.
Right.
Is that something you're looking at in regards to extending?
That type of policy determination, that's really something that's at the discretion of the legislature because they write the bills and affect the laws. I think that's something for documentary filmmakers to discuss with their legislators. to let them know that, hey, this is a form of production that can be impacted by this and makes the program not worthwhile for us because it doesn't give us proper time.
And we really haven't seen a lot of documentaries come through the program, maybe a couple of applications for the 50 to 300. But, you know, work with us. We haven't gotten a lot of experience in that. I mean, if you request an extension, for example, when you get in towards that 2-year time period, it's just going to depend on the information that you give us and the way we can kind of help you out. We're not opposed to trying to help you in that process. Documentaries is just something we haven't had a lot of experience with. There's not a lot of $300,000 documentaries out there. Now, $50,000 may be more reasonable, but again, you know, even if you're doing that, documentaries, you know, if you've got to go out of state to do an interview or stuff, that's going to throw your books off. That's going to throw everything off. So think with that 50 to 300,000, think Louisiana. Think everything Louisiana. If it's, you know, because, you know, again, we didn't write that particular provision, but it's very restrictive and very Louisiana.
All right, on behalf of the Louisiana Film Professionals Network, I want to thank everybody for coming out here and offer these guys an opportunity to put a button on it, just a final send-off for the web stream and for all these good people that came out here tonight.
Thank you guys for having us. Thank you for being an attentive audience. I appreciate the questions. Again, our website, louisianaentertainment.gov, any information that you could possibly want or need about the program. You've got the guy here. Get Stephen's card for sure. Call me directly. We're here to serve you. That's our role. We're state workers. We are here to grow this industry for the benefit of our state and keep our people working. So thank you guys, and visit our website anytime you need.
I'm not going to add anything. I think that puts a pretty nice cap on it.
And I want to thank Todd for all the work that he's done in putting this event together and the LFPN. Be sure to go on Facebook and join the group and get involved with the organization because it's here to support filmmakers in Louisiana. And thank you.
All right.